Hey traders, welcome to Charts and Coffee. Great to see everybody. Happy Thursday. Hope everyone's doing well. All right, before we get started, let's go ahead or before we jump into the charts and your questions, so feel free to type them on in. Let's go ahead and start off with a look at the economic calendar. I'm going to show you two economic calendars here. The first is from Forex Factory. And I look at this one the most. And it's an easy way to see what kind of events, hot zones happened before we got started with our U.S. trading session. Monetary policy report hearings from the UK, from probably not a major market mover for us. However, ECB, BOC, Bank of England, these are all going to be important central banks to keep an eye on. Probably not as important as Bank of Canada and ECB have been these last few months, affecting the U.S. equities markets. Natty Gas storage, unemployment claims at 8:30, half hour ago. Remember, gang, I get a lot of questions on Natty. I love it. Remember, Natty is still in that downtrend. Yes, absolutely. Historically, the seasonality is we will double bottom in February and then begin the seasonal climb higher. Please remember, combine seasonals with whatever process you're using with the technicals. For me, I know a lot of you know that's going to be the multi-trend. That's going to be the grab candle. That's going to be price trading above the 34 EMA wave. So until that happens, please remember, seasonals are not setups. Tendencies are not trades, but we've definitely got our eye on that Natty Gas long side. And so today presents a day trading opportunity. Today is going to present an opportunity for me and I'll be in the futures room and in my sector secrets mastery, and I'll be looking at the hourly price movement ranges. We haven't forgotten about those. I know a lot of you have the hourly price movement range. Completely different curation of data, completely different representation of a shorter term historical volatility. When we get out to the daily, again, it's a completely different set of data points that are giving us daily price movement ranges, historical volatility, support and resistance based upon a different criteria. One's clearly much better for day trading, short-term intraday trading, as opposed to the swing trading that we can use the DPMRs for. So Natty is pretty cool on the schedule, but treat it, please, as a day trading opportunity. All right, with that being said, let's go ahead and jump into the questions. And I'm going to take a look at what we've got going on in the free trading room. Hey there, Paul. Yeah, Paul, on Tuesdays, Thursdays, and Fridays, I broadcast right into the free trading room here at Simpler, and you can just log in and there I'll be. All right. And then if you have to see my mug while I'm chatting, highly overrated, you can check out the Simpler Trading YouTube channel. All right. Hey there, Ann. Looking forward to the Sunday Raghee report. Yeah, I'm going to have to squeeze in that Raghee report right around the Super Bowl, but I'm stoked to do it. All right. So let's get to the first question here. All right, let's jump on in. And by the way, gang, if you haven't already checked it out, great content. A lot of times, some of the questions that we get here in Charts and Coffee, I've got even better detailed explainers over at countdowntrader.com. Trish puts that together a couple times a week. And if you haven't checked that out yet, definitely do, because there's a lot of good stuff there. What I'm looking at in the market, that Natty Gas conversation regarding seasonals was posted there a couple weeks back. We've got some really good updates, really good instructions over there. So completely free. Check it out. All right. So first up, and then Rocky, good morning. I recently discovered the benefits of volume profile. Cool. I notice I use a V-score in my analysis. Yes, that's an indicator that I created back in 2008 that looks at the standard deviation of volume weighted average price. Is this similar to volume profile? This is the easiest way. And Rocky, I've been teaching classes on volume profile now here at Simpler since 2018. And, there's a couple different ways you can look at volume profile. And probably, let me make this chart a little bit bigger here. Probably the easiest way to do that is look at, this is Trading View, by the way. This is sort of the foundation. This is really basic volume profile. And that is, remember what we're looking at when we're looking at volume profile, gang. Well, something I emphasize in the Sector Secrets Mastery a lot. We want to focus on price-based volume, right? So if you're familiar with V-score and anchored VWAP and volume profile, you know that we're looking at how many shares, how many contracts were traded at a certain price level. So this is used in combination, Raghee. So yeah, if you want to learn more about volume profile, I've been using this for like 2008, right? That gives you a really good idea of how long this has been integral to my trading and my investing. Check on what we're doing over at Sector Secrets. We do a lot of very time-tested volume breakdowns. And is it similar? It's anchored volume weighted average price. And then the other layer could be this, see this histogram, or I don't know what you want to call that, but it's like a histogram sitting on the right edge of this chart. That's showing me all the different, what I call volume ledges. Where are those levels where there is more volume rather than less on this chart? And that's really it, Raghee. All right. So as far as practical use, wouldn't it be helpful to know how many contracts were traded at a certain price? Do we think all highs and lows, all opens and closes, all price levels are the same? Or do we know that if there's more participation, what's participation? Attention, conviction, right? Am I losing or winning from that level? If we know there's more of all of that going on based on looking at price-based volume, tell me what kind of edge would you get? It's a big one. And that's why I've been teaching it since, like I said, 2018 here, 2018. Oh, wow. I'm really jumping ahead here. Since 2018 here at Simpler. Thanks so much, Raghee. And yeah, it's been an integral part of what I do for a long time. All right. Next up is quick question about first targets. Prince, feel free to ask me in the mastery. I'm not going to get into a lot of strategy here in this short period of time in the show, but feel free to jump into the mastery and ask any question you might have on first targets using that tool. All right, Stacy. Hey, how are you? Thank you as always. Thank you as always. All right. Good morning, Wynn. How are you? Good morning. Good morning. All right. Next up is taking a look here from the, let's go. Yeah, actually, you know what? I do want to do something else. I want to show y'all something because that Natty Gas setup could be kind of interesting, and it gives everyone a really good idea of the way in which, here we go, Natty Gas could play out. It's a little early. All right. It's a little early, but I know a lot of folks are wondering, Rog, are we not using HPMRs when you've got these yellow and gray lines? No, gang. Remember, think of it as high and low gear or short term and long term. We know that Natty Gas, when the release for the storage numbers are coming out, will have a lot of volatility at 10:30 Eastern. And I'll use these levels, right, to understand where support and resistance is. Now, let me contrast that with another recent high volatility event that we had, which was Powell just the other day. And we knew he was going to create a lot of volatility. Well, we want to measure volatility. We talk about volatility a lot. It's a word that we all say. We all talk about how much we need it and want it. But who talks about measuring it? That's what we're talking about. How do we measure volatility? Well, here's about the most volatility we've seen in the, right here, this was the 1240 Eastern Powell event. Look at this. Look at these candles. And yet, resistance, support. That's what I mean about using volatility. Not just talking about that it's here or, look, we all know things are volatile. We all know things are tough. Granted. Now, what do we do about it? How can we take advantage of it? How can we measure it? How can we set it up? And that's really what I'm getting to here. Not just to throw around the buzzword of volatility, but rather to say, here's what we can do with it. And here's an automated way to see what those zones mean. So I hope that makes sense, whether that's HPMRs or DPMRs. All right, question. Hey there, Cut. Thank you for the symbol. Yeah, keep them coming. Tesla, happy to look at it. All right, let's take a look at Tesla. And if you have a specific time frame that you're looking at, Cut, let me know. But you know what? Let's run the gamut of the time frames that I have here with you all. We'll kick it off with the 5-minute. What do I know about the 5-minute chart of Tesla? Again, I'm going to look at the automated tools on my screen. I know that we have rallied up. We're just above the 34 EMA wave. We've recently gone neutral. How recently? Just after 7 a.m. That's how precise the understanding of market structure really needs to be. We can get within 1 to 2 candles of, all right, this was an uptrend. Now this is no longer an uptrend. We still have bullish sentiment, so I would not be too eager to be shorting, but we are closer to resistance right now and arguably an overbought pre-market in Tesla. But you know what? Who knows what's going to happen during the clearing range, right? Let's take a longer term view. This is where the short term swings are taking place. So you might say, Rog, the day trading has been tough. That's okay to put the day trading on the back burner and say, I want to take advantage of intraday time frames, but where do I go? Testing the last 10 months, 1 hour, gang. This is where, and I'm not even going to say the trends. I'm not even going to say the chop. What are we looking for? We're looking for clarity, gang. It's not just about uptrends, downtrends, or chop, but we're looking for clarity. And the clarity has been very good in that 1 hour time frame. This has been a time frame that both the bot and Lorna Bot, I know a lot of you know Lorna Bot from her popular sessions in the Sector Secrets Mastery Room, as well as the free trading room. We have been testing this for now coming up on just over 10 months and looking at the transition, this current environment, not 2018, 19, 20, what is happening in 22 to 23. And the 1 hour has just been, from a probabilistic standpoint, where that clarity is at. Look at the trend here. We want to think about buying a dip or let me show you something else you could have looked at. Not that long ago. I don't like to look back in the past, but I know that's where a lot of times the visual confidence for something comes. If you want to be a buyer, look at the green grab candles, number one. They're going to tell you, Rob, we probably don't want to short in a green grab candle environment. All right, so we got direction down. How many times have we seen buys around 170 and around 185? And here we are at 207. That's what I'm talking about. So that's the 1 hour Tesla. On the daily chart of Tesla, yeah, we absolutely do want to buy dips into the DPMR. We might start calling the dip PMR. Look at this. That's what I'm talking about. And you might say, Rog, again, we don't have a great uptrend, not back in here. Agreed. But what color are the grab candles? The automation, gang, you don't want to be drawing things manually. Not in 2023. We're not in 1983 anymore, gang. We can take all the ideas in our brain and tell the platform, this is the criteria we're looking for. And if this doesn't appear with these characteristics that I poured out of my brain and into code, unless that's happening, we don't have to do anything. Because remember, I'm biased. I might have a headache. I might be ticked off about something. I might be distracted. Who knows, right? We all have those things. But the computer's never distracted. The computer's never emotional. The computer doesn't have directional bias. It just sees what it sees. And that's where in 2023, we can automate things. We don't have to be doing things manually. If you were talking to me back in 1989, 1999, 2009, I was slowly getting to that level, but the kind of access, the kind of tech we have now allows us to take those classic things like a Darvis and automate it. Classic things like market trend analysis and automate it, right? And that's all I'm talking about here. I would buy the dip, Nick. Absolutely. I would buy the dip, but where? Let's look at those volatility ranges. All right. Next up is, hey there, Eva. Eva, I'll tell you what, we are absolutely continuing to stress test the indicators. We are going to have the webinar. I think what I'm going to end up doing, just so everything is dialed in exactly like I want it, is we're going to move it back, I think, a week or two, but that's it. I'll let you all know probably by tomorrow what those dates are, or this is when Trish usually pops in and says, Rog, we looked at your calendar. This is when we can actually do the webinar. So a lot of that's working around schedule. So yeah, I apologize. I think we're going to move it around a week or two, but that's it. It'll happen around that time, just after that time, Eve. I appreciate it. I appreciate it. Okay, next up, Ian asks, when trading V-score and hourly price movement range strategies, and if I am in a trade and the multi-trend changes, should we get out after? I don't get out, Ian. No. So when I'm in the mastery with folks or the simpler futures room, I don't recommend getting out. However, the holy grail of trading, when I teach, what I emphasize, I sound like a skipping record, I know, but I appreciate you all being open to knowing that the truth is the holy grail is risk management and position sizing. So we make adjustments to that. Ian will make adjustments to position sizing and not adjustment. Well, yeah, sometimes if we know we're going into a volatile day, hot zones, Powell will make adjustments to position size just to start the morning. But when it comes to the mid-trade decisions, we'll make adjustments to how much we're willing to risk on that trade. So I appreciate the question, Ian. Thank you. All right. Absolutely. My pleasure. All right. Next up, coming from our free trading room, Caught again. Thanks for the question. Nick says, I bought 17 March Apple calls in Apple and Google and in Meta Tuesday. Let's take a look at Apple. Sure. We got a question on Apple. We got a question on Google. We got a question on Meta. Sure. First of all, do I want to be a buyer in any of those? Absolutely. Nick, I don't know what time frame you're setting that up on, but you know what? Let me do the same thing we just did with Tesla, right? What do I want to do with Apple? Well, the green grab candles hit. I get it. I can read colors. This is pretty traffic light simple. Got it. You see green? It may not be a buy at that moment, but what it is telling you is please don't short, right? Process of elimination is a really great way to determine direction and strategy. Sometimes it's really smart to ask, what don't I want to do? Not what do I want to do, right? So we're not imposing our will on the market, not until we write checks and the bank bounces, right? Okay, so Apple, don't want to be a buyer. Yeah, the only buy that I see this week in Apple, Nick, was at specifically the zone between 150.5 and 148.5, and specifically with that 9 to 10 a.m. You can see there 1 hour candle. That's the last buy that we've had on Apple from a swing perspective, and that could have been an easy buy at 150, and then you basically scale out at 155. Right? You see that there? It's right on the chart. So no interpretation, no extrapolation. No secret handshakes. It's just what it is, right? Okay. In the meanwhile, yesterday we had a low into the DPMR. That's going to be the candle on 2.7. And that really could be considered another long position that echoes what we saw. Sorry, that was Tuesday. That echoes what we saw in the 1 hour, but this is going to have a slightly longer time horizon. All right, Rog, what do you mean? Gang, we could be in a 1 hour for a handful of days or longer. But the ability to be more nimble and look at a short-term swing trade is there for us on the 1 hour. The daily is going to commit us to longer time horizon, days, weeks, maybe months. The time frame dictates the time horizon. I can't take a 5-minute chart and probably ride it for weeks. I can with a daily. Sometimes I can with a 1 hour, right? So know what that time frame could basically guide us through in terms of how many days, how many weeks. The same setup on the daily Apple, I'm going to have a little bit more ambitious and upside target. I'm going to have a little bit more patience with sticking with the trade because the time frame is far longer. So that's Apple. And those are the specific levels and entries. When it comes to Meta, how am I doing on time? Okay, when it comes to Meta, what I would say is right after earnings, we have that big gap up. That's a difficult way to look at this being, clearly we want to be long. How do we know that? Gang, we've been in a bullish Meta chart since the 11th of January. Since the 11th of January, these indicators, they have no bias. They're not trying to tell me what I want to see, as I might be if I were doing the homework and manually. It's buy and buy only, right? So how much pain do you save yourself by looking only to the long side? So I love that you're looking long, Nick. I would say that I'd probably pass on Meta till I get a setup, right? We've had this big jump to the upside. My only choices are to wait for a DPMR buy, right? Or we pull back to the wave and get long. All right. So yeah, that's what I would say is the approach. Last question before we wrap up the show. Fierce Logic. Do I consider the idea of a pit bull low dynamic before options expiration next week? So a lot of folks are familiar with pit bull lows. They may not be familiar with the gentleman who that process is named after. His name is Marty Schwartz. He's known as the Pit Bull, and he's got my favorite chapter in the original Market Wizards. If you've never read Jack Schweiger's, the original, not the 17 that have come since, they're great, but nothing's like that first one. Marty Schwartz was one of the traders in there, and he coined that pit bull low. And it's basically a tendency for the market to, on the week before options expiration Friday, the third Friday of the month, to bottom out, to put in a low, the pit bull low, sometime between Wednesday and Friday is what I've noted in 30 plus years. Somewhere around Wednesday and Friday, we tend to bottom out. We rally into Monday, the following Monday, and sometimes into options expiration. So it's a tendency, not a trade. I think a lot of traders get into trouble when they don't look at the actual structure of the chart they're trading and just presume that this tendency is going to lift all boats, right? So if we have this tendency at work, Fierce, and great question, we have this tendency at work. Now let's find technicals and setups that are matching that tendency. So we have a dovetail of tendencies and technicals, and then we have a trade, right? Of course, I love alliteration. There you go. Okay, gang, as always, thank you so much. Great questions this morning. Good stuff. I do appreciate it, gang. Thanks as always for caffeinating and dominating with me Monday through Friday. I will see you all tomorrow, same time, same station. Be good to each other.